Hello guys, welcome back to another weekly Forex analysis. In today's analysis, we want to look at three financial instruments, namely GBP USD, USD JPY, and of course gold. Now, we are going to be starting with the GBP USD. Like I have been saying, anytime you want to analyze the market, it is best you start from the higher time frame. Now, the higher time frame will give you the overall picture of the markets. Okay? Now, in this case, we are going to be starting from the daily time frame, and we are looking at GBP USD first of all. Now, take a look at this GBP USD. We have been talking about this pair in the last two episodes of our weekly Forex analysis. So if you haven't watched the last two episodes, please go watch them, so that you'll be able to understand, because I'm not going to go through all of the smallest details anymore. All right, but we just want to look at major structures in the market. As you can see, the market was pretty much bullish before it was converted to downtrend. But at what point did it convert? That is very instructive for us to know. Okay, and therefore I would just want to show you that one quickly. Now, we have this high, and we said in our last two episodes that that high is confirmed. Why is it confirmed? It is because it took out inducement. Whenever a high or low is to be confirmed, inducement has to be taken first of all. And therefore, inducement was taken out there, confirming that high as a valid high. Okay? And then we have this low. But this low cannot be confirmed just yet until it takes out, it sponsors the move up again to take out this major structure high here with candle closure. And as you can see, that happened, and that is known as break of structure. Now, once that break of structure has been confirmed, then your higher low will now be confirmed. And where is your higher low? Your higher low is simply here. Okay, so that is your higher low in the market, which is confirmed. Why is it confirmed like that? Because it sponsored the move up to take out this major structure a high, okay, with a candle closure. And so therefore that is your high, your high, your low. All right, now price travel back up to print this high, because this is not a valid high. It didn't take out any inducement, so it printed this high. And for this high to be confirmed as a valid high, it has to first of all take out inducement. And as you can see, inducement was taken out right here, okay, to confirm this high as a valid high. Look at it. This high is confirmed as a valid high because it took out inducement here. Now remember that our last higher low is still here before this higher high, as you can see. Okay, and therefore if price takes it out, it will become change of character. If it takes it out with a candle closure, I want you to understand that, not with a candle wick. And therefore, as you can see, okay, it took it out with a candle closure. All right, it took it out with a candle closure. That indicates that this is our change of character in the market. All right, so price has been converted from that bullish structure to bearish structure now. Okay, when price closed below this last significant higher low, and then we have this low here. For this low to be confirmed as a valid low, now price has to take out inducement first of all. That is very important for you to understand. So inducement is taken out there. That's your inducement there. So this low now can be confirmed as a valid low. That's your valid low in the market. And remember that when we talk about this pair in our last two episodes, all right, we said after this low, price went up, all right, to take out this inducement. After taking out that inducement, this fair value gap here, price reacted to this fair value gap here. Okay, remember I told you about that, but I said that this fair value gap is not a high probability fair value gap. Okay, and if you haven't watched the video on high probability fair value gap, please check our playlist. I'm going to leave the link in the description. All right, so now when price tapped into this fair value gap, which is not high probability, it either reacted off of it and dropped. You could have gone to your lower time frame, all right, for lower time frame confirmation to take price lower. And when price came back down, take a look at it. it took out inducement. Why is it? Why did it take out inducement here and take out inducement here again? I'm going to explain that to you now. So it took out this inducement, as you can see. Okay, that becomes your inducement in the market. And I'm going to explain why that actually happened. Okay, now that happened because when price took out this first inducement here, when it confirmed this low by taking out this inducement, it took out the inducement with a candle closure. All right, now that should indicate to you that price is most likely to travel back to still continue going higher. All right, to tap on either our DOB or the extreme OB. All right, and therefore when price comes back down, it has to take out inducement for it to travel back higher. All right, for any price to go higher, it has to take inducement. For any price to come lower, it has to take inducement. And therefore inducement was taken there here, all right, with a candle wick, and this becomes a strong POI. So you could have taken advantage of this on your lower time frame to take price higher. And where did price go to when it went higher? After taking out that inducement, it went to this other block here. It went to this POI here. And as you can see, it reacted off of that POI. So you could have taken advantage of this POI on your lower time frame to take trade lower. And when price came back lower, all right, price tap on this point of interest here. This is a strong point of interest, guys. I want you to understand. Why is it? It is because this candle wick took out this previous candle's wick. That means there is liquidity swept there. Liquidity was swept there, and price came, tap into that OB, all right, and move higher. And now remember, I told you in our past two episodes, in our last two episodes, I told you that this is your high, this is your high, and this is your low. I told you that all of this place is a trading range. All right, so price is free to travel all of this range back higher to tap into your extreme OB before dropping. Now I said beyond this fair value gap, which is not a high probability OB, I said there are only two OBs that work on your or inside your trading range. Your trading range is your range high and your range low. Okay, and therefore your DOB is your first OB or your first POI after price takes out inducement. So this is your DOB, your decisional OB. All right, that's your first OB. Only two OBs work, and then the extreme OB. And where is the extreme OB here? This is the extreme OB here, and I'm going to explain to you why these are high probability OBs. All right, now first of all, I want you to know that your DOB is 50-50 chance, but your extreme OB is high probability. All right, and therefore the reason why I'm marking these two OBs here, these 2 points of interest, this extreme OB and your DOB, why I'm marking these 2 points of interest is that your order flow, all the order flows here have been mitigated. And I've told you before, your order flow is superior to your OB. All right, so I want us to look at the order flow here and see any order flow that has been mitigated cannot be used anymore. Look at it. This is the first order flow here. This is your first order flow, as you can see. Okay, that's an order flow, and as you can see, that order flow is not mitigated. All right, that's why this OB is high probability. Now apart from that order flow, here is another order flow here. All right, as you can see, this is another order flow, and as you can see here, this order flow is already mitigated. All right, as you can see, so we cannot use this. It's already mitigated. Now order flow is to be mitigated once, not twice. All right, and another order flow we have in the market is this one here, guys. So we have another order flow here, and take a look. This order flow is also mitigated. As you can see, it's already mitigated here, so we cannot also use this one as our POI. Another order flow is this one. Look at another order flow here. So this is another order flow, and as you can see, when price took it out, look at price has mitigated it. This candle mitigated it, so we cannot also use this one as our order flow, as our POI. And then we have another order flow here. Take a look. This is another order flow here. Okay, and as you can see, this candle has come to mitigate that order flow. All right, now the only two order flows that we don't have, let me show that those ones to you. Let's Let me take out these ones that I've drawn now. Okay, so the only other flows we have in the market is this one, where we have this point of interest, and this one. Okay, these are the two points of interest that are yet to be mitigated. And therefore, if price has tapped into this DOB, if you go to your lower time frame and find any lower time frame confirmation, you can take the trade lower to this major structural low here. All right, so this is the picture. But if this DOB fails, then we'll be looking at this extreme OB here. But as price is moving up, remember, when price is going higher to this extreme OB, please take advantage. Now, take a look. I've told you this several times. As price goes higher like this, all right, you want to see price come to take out this inducement here. After inducement, all right, price continues to go higher. And then after inducement, okay, like this, after taking out this inducement, price goes higher until it gets to this extreme OB here. I hope you understand what I'm trying to say. Please take note of that. It's very important for you to understand that. Okay, so now that is the picture on the daily time frame. So I want to take you to the 1 hour time frame, and let's see what is happening on the 1 hour time frame. Okay, so this is our 1 hour time frame. Okay, now price is already inside of the DOB, the daily time frame DOB. Okay, now as you can see, what we are expecting to see here is this. If this DOB is to hold, then price will need to have to travel back down to this point to take out this structure here. This structure here is known as chalk. So if it takes it out and gives us inducement, all right, then we'll be more than happy to take the trade lower. Okay, if there is any OB here, if it creates an OB here, we'll be more than happy to take the trade lower. Okay, so that's the first scenario, because it has to take out this very structure here. This structure here is your first pullback after price tapped into, okay, after price tapped into this your point of interest. All right, so that is your first pullback, and that is known as chalk. Okay, this is known as chalk. So if it takes out that change of character, if it takes out this low, it shows that price is most likely to go lower. That is, if it gives us inducement. All right, please, that is very, very important for us to understand. It has to give inducement before we can take the trade going lower. All right, otherwise we have no business taking the trade lower. All right, because it is important for us to understand that there's no point taking the trade lower. All right, so we'll have to wait and see what price is about to do here. So that is the picture on the 1 hour time frame. But if price, in the event of this now, does something like this, comes down and then go back higher, all right, to take out this very higher time frame DOB, all right, with a candle closure, then what we will need to do is to now start to look for where we look for inducement, and then after inducement, we look for any OB to take price higher. Okay, so these are the only two scenarios that we want to be looking at on the 1 hour time frame. I hope we understand that. So that's about the whole picture on the daily and the 1 hour time frame of GBP USD. Now let's get to USD JPY. Okay, this is USD JPY daily time frame. As you can see, UJ daily time frame is pretty much bullish, but I just want us to mark some structures in the market here so that we can be able to know where we are in the market. Now let's see some structures quickly. Okay, let's start from here. As you can see, here is a high. Of course, by now you should know why that is a valid high. You should know that. I don't need to tell you. Now, why that is a valid high is that it took out inducement. And where is the inducement here? Take a look at the inducement. It took out inducement here. So that's your inducement in the market, and it has been taken out. Okay? And confirming this high as a valid high. Now, for this low to be confirmed as a higher low, price has to take out this major structure high with a candle closure. All right, and as you can see, that happened, and that will become our break of structure here. Okay, so once that break of structure is established, your higher low is confirmed. Here is your higher low here confirmed. Okay, so after that higher low, what happened next? Now price printed a new high. Price printed this new high. For this high to be confirmed as a valid high, it has to take out inducement. And if we are talking about inducement here, then it should be there. Where is the inducement to confirm that high? Now the inducement to confirm that high is here. And as you can see, price didn't come back down to take out this inducement. So this high is not valid. And the next one is here. For this high to be confirmed as a valid high, inducement has to be taken. And therefore, our inducement can be transferred from here to this point here, as you can see. So that becomes, no, this one, sorry. This becomes your inducement. Okay? This becomes your inducement in the market. And as you can see, price took out that inducement with a candle wick. Okay, confirming this high as a valid high. So this becomes our valid high in the market. Okay, so that's our high. Now for this low to be confirmed as a valid low, it has to take out this major structure high here. And as you can see, price took it out with a candle body close. Okay, and that becomes our boss in the market. Once that boss is confirmed, then this our low is confirmed. All right, so once that is confirmed, our low is now confirmed. So this is our new low in the market. Okay, now remember, when it took out this inducement with a wick, you could have taken advantage of it to go higher. All right, now, but that's not what we're discussing. So now it printed a new high. All right, is this a valid high? For it to be a valid high, it has to take out inducement, and inducement has to be here. All right, this is where your inducement is supposed to be for this high. This is where your inducement is supposed to be for this high to be confirmed as a valid high. And as you can see, it didn't happen. And it printed a new structure high here. All right. For this high to be confirmed as a valid high, inducement has to be taken. So our inducement will be transferred from here to this point here, as you can see. So that's your inducement in the market. This is your inducement. And as you can see, inducement has been taken. And therefore, this high is confirmed as a valid high. So we can move. This is our high. Okay. And now for this low to be confirmed, it has to take out this major structure high first of all. And as you can see, this happened here. It took it out here. Okay. It took it out with a candle close. I think, let's see. Was it with a candle closure? Yes, of course. With a candle closure, it took it out. All right. As you can see, it took it out with a candle closure, confirming this low as a valid low. So this is our valid low now in the market. Okay. So now it printed a new high. For this high to be confirmed, inducement has to be taken. And where is the inducement in the market here? Now, this is your inducement guy. Where is the inducement in the market to be taken? This one is your inducement. Okay. And as you can see, inducement has been taken. And therefore, this high is confirmed as a valid high. This one is confirmed as a valid high. Can you see that? And then for this low to be confirmed as a valid higher low, now it has to take out, remember, this was a break of structure. I hope you don't forget that. This is a break of structure. Now, for this low to be confirmed, it has to take out this major structure high here. All right? It has to take it out. And with a candle closure. And as you can see, it has already taken it out with a candle closure. Okay, so this low can now be confirmed. So this is our higher low, all right, in the market. So that's where we are. Now, this high cannot be confirmed just yet until it takes out inducement. And your inducement, if it goes on like this, if this structure is maintained, then your inducement will become this point here. Okay, but for now, this is where we are on the daily time frame. Okay, so we are waiting for inducement to be taken. But if it creates a new structure, all right, like this, if it now goes up, all right, then inducement will have to be taken here before it taps on any OB and continues higher. All right, so that is the picture on the daily time frame. Now, but let's get to the 1 hour time frame and see what 1 hour time frame holds for us. Now we are on 1 hour time frame of the UJ. Now take a look at this. On the daily time frame, this is the break of structure on the daily time frame. All right, and remember, now well, after breaking this structure on the daily time frame, all right, now on the 1 hour time frame, it printed this high. All right, for this high to be confirmed as a valid high, it has to take out inducement. Then I'm talking about a valid 1 hour high. It has to take out inducement. Now the 1 hour inducement, look at it here. This candle here, this week, is your 1 hour inducement. Okay, and as you can see, it took it out there. All right, so that's your 1 hour inducement taken out. Now remember, your daily time frame inducement is still here. All right, please take note of this. This is your daily time frame inducement. It's still here. Okay, that's your daily time frame inducement. I want you to understand that inducement on the daily time frame is still here. All right, but this is the 1 hour time frame inducement, and price has taken out that inducement. After taking out that inducement, all right, now for you to continue trading price to this low here, to this daily time frame inducement, now price has to take out inducement here. All right, remember, for price to come back down, it has to be with inducement like this. Let me show that to you. I hope you understand that. If price is coming down like this, it has to take out inducement. After taking out this inducement, it can tap on any OB, any point of interest, and then come back down. All right, so that is exactly what we want to look for here now. As you can see, where is the inducement here? Well, there was no inducement. The inducement that was supposed to be taken out is here, but as you can see, price didn't take it out, and then it created another new structure low here. Now for this new structure low to be to take out inducement, we want to see this inducement being taken here. Let me show that to you on the 1 hour time frame. Please take note of this inducement, because price opened here and closed here, and then price opened here and took out this low. All right, before going back, I had to take out this high. So this becomes your inducement. No, wait, price travel like this. Okay, so until price come to take out this inducement here, if price, all right, creates a structure low here, as it is now, this is not an inducement, because price is here to take out this low. But our real inducement is this one here. Let me show that to you. Our actual inducement is here. This is our actual inducement. So if price goes back higher like this, if price now travels back higher like this, okay, to take out this inducement, either with a candle wick or something like that, then we can take price lower to this daily time frame inducement. I hope you understand what I'm trying to say. If price travels to take out this inducement here, this 1 hour inducement here, all right, if price travels back up to take out this inducement here, this is your inducement in the market. On the 1 hour, this is your inducement. So if price now goes back up to take out this inducement, either with a candle wick or somehow, then we'll have wait to take trade lower. You understand what I'm saying? We'll take trade lower to this daily time frame inducement. This is your 1H inducement, and this is your daily time frame inducement. I hope you understand what we're trying to say. Okay, now if that does not happen in the market, if price now creates a new structure here like this, if price now comes back down to take out this low, all right, then our inducement will be here. So if price takes it out, we want to take trade to this point. This will become your inducement. If this kind of structure happens in the market, this now will become your inducement. But for now, since this structure has not happened yet, this is our inducement in the market. I hope you understand what we're trying to say. So that's the picture on the 1H time frame. All right, that's the overall picture, both on the daily and the 1H time frame of USD JPY. Now let's quickly go to gold. I'm not going to waste time on gold. Okay guys, this is gold. First of all, the daily time frame of gold. As you can see, gold is pretty much bullish. Okay, so I just want us to look at some major structures in the market. Okay, so that we'll be able to understand what exactly where we are in gold. Now, gold daily time frame. Let's start from here. As you can see, price has printed this high. Very important for you to understand that after printing that high. Why is that high a valid high? It is a valid high because it took out inducement. Okay, so whenever inducement is taking, a high or low is confirmed. All right, so that high is confirmed when this inducement is taken. All right, and therefore this low cannot be confirmed yet until it takes out major structure high, which is here. And as you can see, it took it out with candle closure, and that becomes our boss. That's break of structure. And because that break of structure has been established, therefore our higher low can now be confirmed. So this is our higher low here confirmed. So higher low is confirmed, and before you know it, price now printed a new high. Of course, you know that this high is not valid. So it printed this new high. For this new high to be valid, it has to take out inducement. And here you have your inducement right here. Okay, but as you can see, price did not come to take out that inducement. All right, so before we know it, price created a new structure. All right, price created this new structure, and this new high, now our inducement is transferred from here to this point. All right, because this is a new high, and therefore that high, the inducement, let's see whether inducement was taken. Okay, so can we say inducement was taken? Let's see. Let's be sure of what we are doing. Well, as you can see, inducement was actually taken to confirm this high. Okay, and therefore this high becomes our valid high. Why is it? Because inducement has been taken. Okay, so this becomes our valid high in the market. And now for this low to be confirmed, it has to first of all take out the major structure high here. And as you can see, it took it out. Okay, so it took out that major structure high, as you can see, with the candle body close. All right, and therefore this becomes our inducement. Where is our inducement? Let's see. This now becomes our inducement in the market. Where? Here. This becomes our low. Why? Because price sponsored the move up that took out this major structure high. So this low is confirmed. All right, and now for this high to be confirmed, it has to take out inducement. All right, so where is the inducement that this high has to be taken out? It is this one, because take a look. Let's see. It is this inducement that price has to take out. All right, and therefore when price takes out this inducement, that means that our high is transferred to this point. Okay, our high will be transferred here. Okay, and then this becomes our inducement. So there is no low here. All right, so this low becomes our inducement, as we said in our last two episodes of weekly forex analysis. So this becomes our inducement in the market. All right, so this inducement is transferred and everything is transferred. This one is no more there, has been transferred to this one here. Okay, so that is where we are in the market. Now remember, our last lower high is still here. Our last higher low is still here before this higher high. So if price comes back down to take out this major structure low here, then we will have a shift of market structure from this bullish structure to bearish structure. All right, now, but as you can see, after this inducement, as we said, price now came down to tap on this daily POI here. I explained to us in the last two episodes, in the last two episodes or so, why this is a valid POI. All right, so that is our demand zone, it's our valid POI, and So price took it out. Price tapped on that POI and started going higher. That's on go to continue with the uptrend. So our expectational order flow is to come and take out this high. All right. And as you can see, price created this structure and went back higher to take out this high. And therefore, we now are here. All right. So for this high to be confirmed as a valid high, price has to take out inducement, and inducement is here. This is our inducement in the market. So until price takes that inducement out, we cannot decide on anything in the market right now. All right. So we are waiting for price to come and take out this inducement. As soon as price takes out this inducement, for instance, if price comes back lower, all right, and takes out this inducement like this, okay, so we can begin to look for a structure like this, okay, can begin to look for a structure like this, all right, to take out this inducement and then, okay, sorry, that's not what I wanted to do. So we're waiting for this inducement to be taken. We are bullish. So we are looking for this inducement. Once this inducement is taken, okay, we can go higher. All right, once inducement is taken, this inducement, once it's taken, then we can begin to look for either way. If it wicks it with a candle wick, then we can go higher from here. If it wicks with the candle wick and gives us TNCP, all right, otherwise we wait for price to tap on our POI, which is here. All right, to tap on our POI before we go long. I hope you understand what we're trying to say here. Okay, so that is about that. So, but we are waiting for this inducement to be taken on the daily time frame. That is the picture on the daily time frame. If that inducement is taken, now the OB we'll be looking at is this OB here, for price to return to this OB, okay, and come and take it out, this one, for price to come to this OB, all right, before going higher. But if in the event that price didn't come to take out this inducement and created another high here, okay, then this will become our inducement in the market. And then after that inducement, we can now take price higher or wait for price to come to this very structure, this OB here, before going higher. I hope you understand what we are trying to say here. So that is the picture on the daily time frame. But for now, this is the inducement we are looking at for price to take out before we take any decision in the market. That's about the daily time frame. So let's quickly go to the 1 hour time frame and see what the 1 hour time frame is doing. Now, this is your 1 hour time frame. Okay, this is your 1 hour time frame. Remember, this is the daily inducement. All right, so that's our daily inducement. And so we want to see the structure on the 1 hour time frame. Let's see where we can capitalize on. So let's see where we can capitalize on. So as you can see on the 1 hour time frame, price took out this high on the 1 hour time frame. Take a look. It took out this high. Price took out that high with a candle body close, and that becomes our break of structure on the 1 hour time frame. Okay. Now remember, this high is valid. Why is it valid? Because it took out inducement. All right, and therefore this low. Okay. Remember, this is the daily inducement. Don't forget that. This is our daily inducement. All right. Now, this is our low now. Now, the 1 hour low happens to be the daily time frame inducement. Do you understand that? The 1 hour low happens to be the daily time frame inducement. And therefore, when, let me just denote this thing so that you will understand what I'm trying to say. Now, this is our 1 hour high. All right. That's our 1 hour high, and that's our 1 hour low. Okay. Now, this has to change. Sorry. This has to change. Okay, so that's our 1 hour high, and this is our 1 hour low. All right. So now, for this low to be confirmed, this low is confirmed when price went up to take out this major structure high, the 1 hour time frame major structure high. All right, now it created a new high. Is this new high confirmed? Well, for this new high to be confirmed, it has to take out inducement. And as you can see, the inducement here, take a look. Let's see the inducement. Okay, so this is the inducement, or better still, you can say this is your inducement in the market. All right, so price has taken out that inducement. Okay, that 1 hour inducement, that is. So when price took out that inducement, now our high is confirmed here. Okay, so this becomes your new 1 hour time frame, 1 hour time frame high. Okay, please take note of this. This is very important. This is your 1 hour high, higher high. All right, remember this was a high, this is a higher high. Okay, so that's your 1 hour higher high. And because why? It took out inducement, it confirmed that high, and then price came back down. When price came back down, it printed this low here. Okay, so this low cannot be confirmed just yet until price takes out this very high. Okay, so the low cannot be confirmed just yet. I hope you understand. Now, but meanwhile, understand that on the daily time frame, we are pretty much bullish. Okay, and on the 1 hour time frame, we are also bullish. So I want you to understand that. But now, price, after printing this low, all right, take a look at what price did. Price took out inducement here. Price took out inducement. Look at this inducement here. It took it out. All right. So when it took out that inducement, it confirmed this low. All right. As what do you call it? No, it hasn't. No. Sorry. I'm sorry about that. So price traveled back down. It cannot take out the high. It cannot be confirmed. This low cannot be confirmed just yet until price takes out this major structure high, which is the 1 hour high. Until price takes it out, all right, then this low cannot be confirmed. But take a look at what price did. When price printed this low, after taking out inducement, price started traveling back up. And when it traveled back up, what happened? Price tapped on this this OB here. Price tapped on this OB here. Can you see this OB? Price tapped on it. Look at it. Price tapped on it. So that's where we are right now. Okay? That's where we are right now. Price tapped on that OB. Now, if this OB here is to hold price to go down, all right? But that is not this is not a high probability OB. Why is it? Because price took out inducement here on internal structure. But if, for instance, this OB holds price, we want to take price to this 1 hour inducement here. We want to take this price to this 1 hour inducement. Once price takes out this 1 hour inducement, then we can begin to look for bullish opportunities. But for now, we want to look for bearish opportunity to take price to this 1 hour inducement. Remember, this 1 hour inducement has to be taken out before price can do anything. Without this inducement being taken out, price cannot do anything. So now, right here, all right, for this price, for this POI to hold structure, all right, we want to see chalk taking place. And where is the chalk here? The chalk will be here when this low is taken out. All right, if price takes out this low just like this, let me show that to you. If it takes out this low like this, all right, if it takes it out, let's draw it well. If it takes out this low like this, okay, then we will look for this inducement to be taken, and then look for any OB and take price lower to this 1 hour inducement. Please don't forget that this 1 hour inducement, we need to take price to this point. All right, so after that 1 hour inducement, then we can look to buy this market. But for now, we want to look for sell. Okay, so that is what is happening on the 1H time frame of gold. I hope you understand our drift here. All right, but if price doesn't come back down to take out this change of character, this chalk here, all right, and if price continues to go higher to take out this, if it closes above this point of interest here and closes above this high, then we'll begin to look for opportunities again. But essentially, we want to look for opportunity to come down, to to this point of inducement. We want to see price come to take out this daily inducement. All right, unless price wants to create a new structure on the daily time frame. All right, so that is the whole picture of gold, both on the daily time frame and the 1 hour time frame. All right, guys, I hope you had value in this video, but if you did, please give us your subscription and give us a thumbs up. We need your thumbs up, please. Very, very important. It is completely free, so that the algorithm, all right, of YouTube will be able to show more of our video, of this video, to other people, so that they can also gain from the knowledge that you have gained today. All right, guys, so now if you have not joined our free Telegram channel, please join immediately. And if you want to take advantage of our promo to become part of our VIP community, you can do that just immediately. The promo, I have decided, RALLYTOP Investing has decided to bring down the cost fee due to popular demand, and we are saying that with only $50, you can become part of our VIP community, and then you will learn how to become a professional within 60 days. All right, so just for $50 you can be part of it. So if you're interested, I will leave the link in the description below. It is the promo that is going on, and remember, the promo will end on Wednesday this week, on the 8th of November, and this is going to be the last our private course for this year. Is going to be the last. So this is an opportunity. We are not going to do anything for December. We are just giving out this ridiculous discount just for the month of this November, and it ends on the 8th of November 2023. So if you're interested, please take advantage. I'm going to leave the link in the description. All right, guys, I see you in our next weekly Forex analysis.